Hey, what's up, everybody? It is Monday, May 12th. Yeah. Big day today. Big day because it was announced. First of all, let me just say, I don't react to headlines. You probably know that. If you've been watching my videos for any period of time, if I do react to headlines, it's usually I go against whatever the reaction is to the headline. Because to me, and I've been doing this a long time, over 40 years. To me, headline trading is just pure emotion. I mean, people see a headline and then they react without thinking or just a very kind of shallow understanding. First of all, what was announced, you probably know by now that what was announced was the U.S. and China decided to put a 90-day pause on tariffs. Supposedly tariffs are going to be lowered. I don't even know what the actual deal is, okay? And you might say, well, Mike, you should be finding that out because that's important. And let me just tell you that the reason I don't really delve into the headline stories to try to get whatever information is in there is because at the end of the day, I see the numbers in the data. I mean, I see what's happening with the tariffs right now in customs taxes. I mean, I see that. I've been talking to you guys about that. And I can see what is happening if there's rising, domestic private investment. I see that in the numbers. So it's not in my interest to waste time looking at these stories and trying to see if whatever journalist is writing this story, whatever reporter is writing this story has the numbers right. I don't even know if there was a deal today, okay? All I know is that there was a 90-day postponement and the market shot up 1,000 points. Now, I look beyond that. Like I said, number one, I look at the data, so I don't concern myself with these stories because I'm on top of the numbers every single day. Okay, and speaking of numbers, something came out, today in my data, which I'm not going to mention here. If you want to see what it is, you got to sign up for a 30-day free trial to my report, so go to pitbulleconomics.com. But I sent it out to my subscribers. Something very, very interesting, which I kind of had been anticipating. It hasn't happened up until today's data. Now, maybe it's a temporary thing. I have to, one day's data is not going to suddenly make me say, oh, the trend has shifted or something has changed. I need to let it compile a little bit further to see if in actuality a new trend is taking shape. And if it is, I'll tell you this, it's important. Okay? But my inclination on today's move is it's not going to last. And the reason I'm saying that, number one, it was driven purely by headline trading, short covering. This is not fundamental stuff that speaks to a bullish economic condition necessarily. But I see what's going on with fiscal flows, all right? For example, I see that net government transfers are starting to go down, all right? I see that in the banking data where we had a big increase for a period of time leading up to the tariffs, we had a big increase in commercial and industrial loans because that reflected, front running of the tariffs. That was firms and consumers purchasing imports before the tariffs went on. Now that peaked out. Those loans peaked out. They're starting to come back down again. So their growth has slowed down a lot. So all that future demand just was front loaded, okay? And we're probably going to see, I mean, to me, that means we're probably going to see much weaker levels of demand as you go out later in the year, because a lot of that future demand was brought forward in order to avoid the tariffs, okay? I'm seeing fiscal drag develop. Now, it's not massive, but it's enough that it's starting to bring down net government transfers, which I just mentioned. So individual tax deposits, even corporation taxes. Now, tax rates haven't gone up, but I've spoken about this in the past. The two things here. Number one, we have to remember that, and I said this last year, I said that the IRS tax extensions for like hurricane affected areas and what happened in North Carolina and stuff like that, that should be looked at back at that time, I said, you got to look at that as a temporary tax cut, which is going to be taken away. And it just got taken away because, like I had to file May 1st was, so that has happened. That temporary tax cut, which was beneficial for the economy in that period from last October until this May, that got taken away. All right, so that tax cut got removed. In effect, when you remove a tax cut, fiscally, it's the same thing as saying you got a tax increase. And I see that very clearly in the numbers. And I've been telling you guys about that. You got fiscal drag from that. You have fiscal drag from the tariffs. I see the tariff numbers, okay? Every day I see the tariff numbers. I'm like a doctor who comes into the room of the patient and looks at the chart and looks at the vitals and records those things, comes back the next day, comes back the next week, and I could compare, I can look and see. Now, a lot of you out there, and I know like most of the financial industry, they don't do things like that. So, taxes, fiscal drag. Tariffs, which are taxes, fiscal drag. What else? Interest income transfers, flat. Last year and in 2023, we had massive increases in interest transfers. That was one of the reasons why in 2023, when everybody was bearish, the whole world, remember guys like Mike Wilson at Morgan Stanley and all these people, we're going to have a recession, we're going to have a depression, the rate increases by the Fed is going to cause a calamity and a catastrophe. And I said, no, that's not going to happen. I said, as long as they raise the debt ceiling, we're going to go to new all-time highs. And those interest rate increases by the Fed are going to result in massive interest income transfers into the economy. And that is exactly what happened. That's not happening anymore. It's flat. It's not down, although T-bill interest is down $27 billion compared to last year. That's not peanuts. And by the way, T-bill interest, the drop, that's what's keeping overall interest income transfers flat. They've been flat since February. Now, that might go up a little bit this Thursday. We get a quarterly interest payment, but it's not going to make that much of a difference. So you got tax, fiscal drag. You have tariffs, fiscal drag. You have interest income transfers, fiscal drag. And you even have Social Security, the biggest line item of expenditure for the government, which basically is running at the same level as last year. And that's only because of new enrollees, okay? We had a much smaller cost of living adjustment increase this year, okay? It was like 2.5% compared to last year. I think it was like 3.7. The year before that, it was huge. It was like 8.3 or something like that. So we're not getting that boost off of Social Security like we got in prior years. You got the only cuts that I could see, actual spending cuts, because we got to talk about that too, right? We heard a lot about Doge and the spending cut. The only area where I see actual spending cuts in the data is the Department of Education. Clearly, and I think Trump, by executive order, he shut it down for the most part. Department of Education down 15 billion year over year. And by the way, every week that number gets bigger. Okay, every week it goes up by $1 billion negative. All right. So 52 weeks in a year, you're looking at 50 billion by the time a year is out. And if we're going to stick with Department of Education, you got student loan payments, which have resumed. And even though deposits to the Department of Education are down compared to last year, that gap is shrinking, okay? Which means that money's coming in, payments, loan payments, all of these things, I'm telling you, are fiscal drags. So just juxtaposed against today's euphoric headline jump of 1,200 points. I think they ended like up 1,180 or something, the Dow. Juxtaposed against that is the fact of all these other things that I've been telling you about, that nobody's paying attention to those things. Now, the way you look at that, because I like to give you guys analogies, it helps you to understand, is like you're driving along in your car and the brakes are coming on, slow brake pressure. All that fiscal drag, it's not slamming on the brakes right now. I'm not saying any of those things, even combined, that's not slamming on the brakes. But that's brake pressure, and it's going to be an increasing amount of brake pressure. By the way, there's something I didn't even mention, which might change the whole dynamic, which is the budget. Like Congress is still working on that. It's still on reconciliation in the House. And like, I don't know like how that thing is going to end up. I mean, is that going to be a net increase in government? When you add it all up, all the elements in that bill, when it finally gets done, if it gets done, when you add it all up, we got to see, is that going to be net positive interest income transfers, or is that going to be net reduction in interest, because they're talking about tax cuts and spending cuts. So we got to see how that ends up to be. Making a bet right now without seeing something as important as the budget. I mean, the budget that's the core of all fiscal, all right? We're running on the 2025 budget. This is it's going to be for starting in October, all for next year. And it's going to take us, that'll take us all the way through the midterms. And then things could change again. So this rally today, I mean, I don't know what else to tell you other than the fact, like, I've been doing this a long time, all right? And when I see people jump, and some of this jump obviously is short covering. You had a lot of people who probably were very bearish. That is reflected in the some of these sentiment surveys that I follow. So like they got squeezed out today, I'm sure, margin calls and things like that by short positions. But like, I'm looking at that, which I said is like, for me, it's just flaky people looking at headlines and like that's how they. By the way, my portfolio today reached a new high for the year, because in that correction back in March and early April, remember I told you, going fishing, you throw the lines out there. I had all these resting buy orders in my favorite stocks. That's how you do it. I forgot even about a lot of these orders. They were just placed months ago. And boom, 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 they all got hit. Like my lines, I got fish on, right? Or mousetrap, clicking off. And now, because of the rebound, my portfolio is at an all-time high for the year. So, I mean, that's how you do it. I've tried to explain to you guys that the way you use the stock market is not to trade it. That's just gambling. That's crazy. The way you do it is accumulate wealth, asset accumulation. And for that, you just need some patience. You got to be long-term. You got to be non-emotional. You got to buy when everyone's selling. I have to say this too, which is, I just saw this today and it makes me laugh. Because today I also saw a headline, it's a bull market again. Okay, because the NASDAQ, I don't know, reached some level where now the media or whoever these people are, now it's a bull market. But 2 weeks ago, remember they were saying it was a bear market and the death cross and all this shit. And so people were selling then because they listened to these idiots. It's a bear market. Like that is just such a contrived, made up thing. Like an arbitrary, what is a bear market? Like they just say, oh, when it goes down 20%. Like who came up with that? That's just an arbitrary freaking number. And when people see that in the headlines, I maybe even said something about that in one of my videos. It's like, they're selling down there, 20% down. This is the thing I don't get. Any consumer in this country, if their favorite, whatever product or item was on sale 20%, they're running out there to buy it. And now that it's up 20%, like how many consumers do you know where if Amazon was going to do, one of their Prime Days, right? Amazon has Prime Days. But Prime Days, instead of being like discount, they say, Amazon Prime Days, it's 20% higher. Come and buy. And everybody rushes to buy. Nobody does that. But that's exactly what they do when they invest. It's an incredible, bizarre behavior. Really. And when you think about it, when you really think about it, it should be so easy for you to make money, to accumulate. Well, I don't even like saying make money. Accumulate wealth in the stock market. It's the greatest vehicle of all time. I was just talking to a friend of mine. The only thing I still, trade anymore is Forex. I like that, and that's the only thing I really trade anymore. I spent years as a commodity trader, a futures trader on 4 different exchanges, so I know those markets very well. But I mean, to me, the stock market is incredible. So yeah, anyway, I don't trust this rally. I look at the economic fundamentals and behind the scenes, right? Like I just told you, behind what I saw today, which is this euphoric reaction, you got all that rising fiscal drag, pumping the brakes. And so like, I'm waiting to see too, what the budget is going to end up to be. So I don't think this bounce is going to be sustainable. We'll see what happens. I think it'll come back down again. We'll see what happens with the budget, because that's going to set the tone. Like I said, that's going to set the tone for the rest of this year and next year, all the way to the midterms, and then really into January 2027. So, there's a lot of unknowns still, but I can tell you this. I know what the numbers are. I don't know what the budget is. It's not done yet. But like, even when that's done, I'm going to see those numbers every day. The doctor's coming in the room, going to be looking at the vital. I'm going to see those numbers every day. I'm not going to be guessing. I record those numbers. I have a database of those numbers. I see them numerically, graphically. I can see them. So like, yeah, that's my process. All right. Anyway, that's it for today. Please like and subscribe. And don't forget, if you want to see that thing I was talking about, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.